Yeah.
But yeah, with the IBM thing that you mentioned, like I do think, situations where you're going to have kind of multiple entities, and especially ones where, they're more like partners rather than in a hierarchy. I could definitely see that making sense.
Yeah, but people still wonder, like, okay, but why? Why is that faster? Why is it better? And it's tricky. It's tricky to understand when it actually works.
Yeah, I guess because then you would have only one ledger rather than multiple ledgers.
Mm-hmm.
And because it would be like a time-stamped thing, you could always go back and see like who made changes, when they made changes. And so it just is like essentially software that enables trust. Rather than everybody keeping their own ledger and having to keep checks up on each other, then they have the one record that they can trust.
I've actually had a conversation with somebody once where they're like, but a database can do that. I'm like, okay, but what about this aspect of blockchain, like the shared ledger? Well, you just have a shared database. And eventually the conversation gets to them describing a shared ledger. And I'm like, so in other words, blockchain. And they're like, oh, I guess so.
Yeah. I do think
it's really, I mean, kind of in a way.
I mean, I do think when you have the asset built in, then somehow it's like a little bit more obvious what the purpose is, because there is this like asset that's attached to it. But yeah, I mean, certainly, I mean, come on, there's like these huge companies that are pouring tons of money into these blockchain initiatives, and I'm sure they would have figured out by now if like this wasn't a good idea. Do you know what I mean? Like, as far as I know, I'm not an expert on this, but I think the Walmart one with the lettuce, they have built that out and are and it's functional. So I would imagine they wouldn't have launched it if they didn't think it was superior. So
right, because you could be suspicious of the jet company because the end game could be like, yeah, we could have just used a database, but now we get more press because blockchain, right? Whereas Walmart is like, I guess they could get a little bit of a press boost because blockchain, but that wouldn't be enough press above and beyond what Walmart already gets to justify that amount of expense. So
exactly.
All of the money.
Yeah, it's interesting about the turnkey jet people. We'll see how much those tokens get used.
Well, it's about time to do the show. So
okay.
Everybody comfortable? Everybody ready?
Yep.
Yo estoy listo.
Bueno.
I know.
But Sarah, the show will be in English today. I know.
If we must.
Would you like to read line 3 today, Sarah?
I would.
Okay, I will count you in.
All right.
Here we go. In 3, 2.
Craig Olson has supported independent tech news directly for 5 years. Wanna be like Craig? Become a DTNS member at patreon.com/DTNS.
This is the Daily Tech News for Friday, April 5th, 2019 in Los Angeles. I'm Tom Merritt.
And from Studio Feline, I'm Sarah Lane.
And I'm the show's producer, Roger Chang.
Len Peralta will not be illustrating this week. He had some technical difficulties, but he will return next week. We are joined, though, by Laura Shin, host of the Unchained Podcast and Unconfirmed Podcast, and somebody who covers the Bitcoin, cryptocurrency, blockchain space very well. Laura, welcome back.
Thank you so much for having me again. I'm glad to be here.
It was kind of a busy week in your area of the news, so we've got a lot to talk about.
Yes. Tell me about it. I was working like morning till night every day for various reasons.
There's some SEC guidelines to talk about. We're gonna ask Laura where she thinks this whole space is as far as Bitcoin and blockchain. But let's start with a few tech things you should know.
The Wall Street Journal sources say that Apple Music reached 28 million paid subscribers in February, which passes Spotify with 26 million. However, if you include the free tier, Spotify has more users than Apple Music in the US, and it still has more paid subscribers worldwide. The reports also they don't complain, but they do claim that Apple Music's worldwide growth is higher than Spotify's overall.
Google announced the dissolution of the Advanced Technology External Advisory Council, the AI ethics thing we told you about last week. Well, it's already gone. Google employees petitioned for the removal of Heritage Foundation President Kay Cole James. Then Carnegie Mellon's Alessandro Acquisti resigned. So Google said it became clear the council couldn't function properly, and it, quote, will find different ways of getting outside opinions on these topics.
A pilot program from Google puts a row of advertisements on Android TV device home screens. A Sony support page says, quote, the purpose is to help you discover new apps and contents for your TV. Sony says it's managed by Google and can't be customized. XDA developers report seeing the Strip in Sony Smart TVs, the Mi Box 3, and NVIDIA Shield TVs as well.
Can't imagine anyone will mind, right?
No.
Finally, China's TikTok app is launching a talent contest where users from Japan and Korea can upload music videos to be judged by local musicians and people from record labels. Become the next K-pop or J-pop star. A combination of popularity and judges' opinions will narrow the field to 18 over the next 5 months. TikTok says 5 to 10 acts will eventually be crowned winners at the end of the season, which includes getting a record deal, I think. All right, let's talk a little bit more about what the European Commission is doing to Steam.
Let's do that. The European Commission sent statements of objections to Valve, Bandai Namco, Capcom, Focus Home, Koch Media, ZeniMax, and yeah, if that wasn't enough for you, saying that it believes geo-blocking Steam purchases violates Article 101. That article regards the digital single market, and geo-blocking prevents cross-border sales in some EU member countries. After an investigation, the European Commission could ban the behavior and fine companies up to 10% of their annual worldwide turnover, which could be a lot.
If you're not familiar with how this works, it could be a little bit tricky to understand. They're not saying that if you buy a game and you live in Poland and you travel to Japan that you should be able to play it. They're saying if you buy a game and live in Poland and you travel to Germany, you should be able to play it, because what Valve is doing with Steam right now is geo-blocking by countries within the EU. And the EU has this digital single market initiative to try to get rid of those kinds of geo-blocking. For instance, with Netflix as well, to say like, hey, if you subscribe to Netflix, you should be able to get access to your subscription no matter where you are in Europe. And that means your own home library, not just the Netflix that's available in France, say, if you're a German subscriber, et cetera. So it'll be interesting to see if these companies and Valve come to an agreement with the European Commission somehow, because unlike Google, which likes to fight these things because it's a much bigger deal, I think Steam would just like to make this go away, and they'll need the cooperation of these publishers to do it. In preliminary Q1 earnings, Samsung reported operating income fell 60% on the year, the biggest decline since Q3 2014 and below analyst estimates. Samsung had issued a warning last month that they thought the income would come short due to decreases in DRAM and NAND memory prices as a result of slowing sales. DRAM demand is expected to rise, however, in the second half of the year as data centers work through their existing inventory, so that could be good news for Samsung. Samsung display divisions were also hurt by lower than expected iPhone sales and competition from Chinese display makers.
Yeah, we've been talking about the fact that Samsung had said, all right, brace yourselves, it's not going to be a great quarter. But the numbers are grim, particularly since it hasn't been that big of a decline since back in 2014, 5 years ago. But again, this is one of these kind of cyclical things that I wonder, how much are we going to be talking about this in the fall? It may even out the way that many quarterly earnings do for companies. But because Samsung does depend on other companies, the iPhone sales being a really big factor in this, for example, if trends start to go in other directions for other companies, which are even technically competitors of Samsung, then I'd love to see what Q4 looks like for the company this year.
Yeah, Samsung's really complex. For instance, the Galaxy S10 was on sale during Samsung's Q1. But it is expected to continue to sell well enough to sort of boost the mobile revenues. At the same time, the display part of Samsung's business would like the iPhone to do well. They need the Samsung Galaxy S10 and the iPhone to do well, as well as any other clients they have. And don't forget that Samsung has other divisions as well. They have financial divisions. They have white good divisions, things like washers and dryers. But the big money tends to come these days from display panels, memory, and phones. And so the big drag has been that large amount of money they got from memory has stalled, has stagnated as the market has stalled. And yeah, like you said, Sarah, if it loosens up at the end of the year, if iPhone sales are pretty good, then Samsung could have a pretty good looking Q4. Laura, I'm actually curious. Do you care to declare if you use an iPhone, Android, or some other phone?
I use an iPhone, but I often will give out a Google Voice phone number for security reasons, which goes back to a crazy trend that's been happening in the crypto space now for a few years. I wrote about it all the way back in 2016, but scammers will like steal your phone number through, like if you're at Sprint or whatever, they'll call and be like, so let's say I'm your hacker, I'll call AT&T and say, hey, I'm Tom. I want to move my service over to Sprint. And then once all of your calls and texts are coming to my phone, I will like lock you out all of your accounts. And the reason this is happening to crypto people is that like if they can break into your Coinbase account or something, then they can like send the Bitcoin out and there's no bank of Bitcoin that can reverse the transaction. So long answer to your question, but yes, I use an iPhone.
and yet there are reasons to sort of protect that phone. That's really good insight.
Yes.
And I don't know, is there a preferred operating system in the cryptocurrency space?
Well, I think a lot of people are doing what I'm doing, where the reason I explained that was because if you text me, it will look like it's like not an iMessage because it's like a Google Voice text. But I think what's happening is like essentially whatever kind of phone you have in the crypto space, you will use Google Voice. So it depends on how technical you are. I think the more techie types, they use the Google phones.
Yeah.
A study published in Psychological Science by scientists from the University of Oxford found little evidence of a link between time spent on devices by teenagers and general well-being. We've talked about this a lot on the show in the past. The study combined self-reporting and time diaries, which records what teens are doing at certain times of the day and also where they are. Data was used from 17,000 teens in the UK, the US, and Ireland, collected between 2011 and 2016. Further studies could take into account the type of content being viewed as well, which I think would be the logical next question. Okay, if you're doing great, I mean, are you hanging out on real positive networks, or I think that matters a lot into something like this.
Yeah, if you're generally seeing the data say, okay, there doesn't seem to be a strong link between the general well-being and the amount of time spent, is there a link to be found in that data between the people who are not doing so well and the kind of content they're looking for, particularly if they're looking at violent content, et cetera? I'm not trying to assume that there's a link there, but that would be a logical thing to look at, especially as countries like we heard about from Australia are really trying to crack down on certain types of content even being allowed onto platforms. We should know what kind of effect that has and do some studies on it. But Roger, as you know, you've got two kids. How does this strike you?
It's an interesting study, and I think really what it highlights is that there isn't a comprehensive, definitive study that says this explains everything, right? This is yet another study in this ongoing research to find some sort of correlative data between screen time and adolescent health. And it depends on if you're just looking at screen time and then like the overall health of the individual, you glean certain things. But for example, if you do a study on children with like emotional issues like depression, and then you study the amount of screen time, you'll come up with different correlative data. And really, it's building a study that kind of answers what you're looking for. I mean, there's so many ways to you guys have just covered so many ways to look at it that I think this will help build a picture, but it doesn't help complete the overall picture of what we need to do. But I will say, as a parent, it does relieve me some of the guilt.
one more study to help relieve the guilt.
More screen time does not equal sadder children.
I mean, I think it does help complete the picture. It just doesn't complete the picture.
Yeah, exactly. It's one more piece in the giant puzzle that we are trying to build between screen time. I mean, like we've been doing this for decades with television and children. Like when I was in school, TV's going to rot your brain. You're going to go blind. If you watch it in the dark, you watch too much, you're going to have a stupid idea. There are all these things that came out of it, which turned out to be more of a symptomatic, like they were watching a lot of TV because there was a symptom of something else that was going on with that individual, not necessarily the cause of whatever. And so what we need is longer, we need more studies over a longer period of time to give us, yet another brick to kind of build out this giant picture.
Yeah, that's why it's good this study did more than just self-reporting. Self-reporting can sometimes overestimate at one end and underestimate.
Yeah, self-reporting is always a 50-50, especially when they found out that everyone who filled in one of those dietary things about how much they ate and how much they weighed and how their physical health.
Tons of examples of that.
Yeah. So
Bloomberg's Mark Gurman reports his sources say Amazon will launch a pair of wireless Bluetooth earbuds with voice integration in the second half of 2019. So you'll get good old Alex A in your head. The device will reportedly look similar to Apple's AirPods, have a USB charging case like the AirPods and others like it, and let users tap to answer calls and change tracks. So basically what you would expect from a Jabra or AirPod or Google, except made by Amazon. Current test units are in black or gray, although who knows what they'll end up being in, but it sounds like maybe they're testing some colors out there for them. Sarah, you're living with the Jabras right now. How enticing are these Amazon earbuds?
I think it very much depends on price. I will say that Jabra, which is the model is the Jabra Elite 65T, which technically integrates with both Siri and Alexa, and you can toggle between the two. I have not found that to be very seamless. That'll be part of a report that I'll be making pretty soon. But I think if Amazon wants the voice assistant to become a bigger player against Google's assistant, which is huge in the mobile space, then this is the right way to go. I don't know how great these earbuds are going to sound, but it's not that hard to make good sounding earbuds these days. The Jabras that I have are over $150. What if Amazon does something similar for $99? Gesture stuff, pretty enticing as well. Again, I have found anything with a Bluetooth connection to my phone can be squirrely. It's not just earbuds; it's lots of things.
It's just Bluetooth, yeah.
Yeah, it's just Bluetooth, but it is getting better, and I think that Amazon doesn't create competition and say we're the high end company. No, they're really successful because they do pretty good stuff for prices that most of the time people consider really affordable. So it seems like a really good move on their part.
Yeah, Gurman's article too says that the sources are saying Amazon wants these to sound better than the AirPods. So if they could do that and be cheaper, then that is kind of a slam dunk. Laura, before we move off this, I'm curious if you use any of these kind of wireless earbuds for your work.
Yeah, I use AirPods. But one thing I was wondering is, I'm sorry, it's connected to Alexa somehow?
Yeah, so that's built into the earbuds, according to the sources, anyway.
Oh, meaning
so
like you could
having
listen
Siri
to music
in your ear, you tap it.
So instead of you being like, I have to be near my speaker in my living room, it would just be part of your life wherever you are.
Oh, I see. Yeah, I don't know. I don't trust Alexa. I don't trust any of those home listening device. Like I would never have one of those in my home listening to me all the time.
But you wouldn't have to have one in your house. It would just be in the earbuds. So
yeah, you could just use. Yeah. I know.
Although you could make the same argument. They're still listening. I'm just walking around outside.
Your earbuds are listening to you? No, they're not.
Yeah.
I see what you're saying.
Yeah.
The U.S. Securities and Exchange Commission issued guidelines this week for companies that want to sell digital tokens. The SEC considers most cryptocurrencies an investment contract. That means they should be considered securities and registered with the SEC before being offered to the public. The SEC guidelines do say that Bitcoin and Ethereum both are not securities because they're decentralized. In a separate letter this week, Turnkey Jet was also allowed to offer unregistered tokens because the proceeds would not be used to build that token network, and then the tokens would not trade outside of Turnkey's platform. Laura, I know this is very much in your wheelhouse, and in fact, you suggested this story for us today, although there's a couple different stories in here. What are your thoughts on how people are trying to define all of this stuff going forward?
What came out this week is actually not that different from what different members of the SEC have been saying all along. However, what is different is that now it's been codified into this document, whereas before they were generally comments by, for instance, the SEC chairman or different directors of the SEC that they made in like speeches or at conferences, and so. People were just like trying to parse what they were saying all the time and trying to figure out how official is what they're saying. And then now that it's actually come out, it's a pretty kind of like a full analysis of how securities law would apply, whereas like before it was literally just maybe like a sentence here or there, where then people were trying to extrapolate. So it definitely made a lot of waves. However, in terms of the actual significance, there's nothing that's really new. There are like small pieces, but in terms of the overall gist, it's been kind of what different individuals have been saying from the SEC all along.
It does seem like that's one of the frustrations people are having is they pointed to a 1946 Supreme Court decision on investment contracts rather than saying, hey, this is a whole new thing. We're going to have to come up with whole new rules for it.
Exactly. And like I said, they've been saying that all along. 2 years ago now, they came out with kind of their first quote unquote report that applied to the space. It was called the DAO report, which addressed, I don't know if you remember back in 2016, the DAO, this decentralized autonomous organization that was structured like a venture fund, and it raised $150 million in a crowd sale. Eventually, it went defunct anyway because there was a bug in the code that enabled somebody to take $50 million. And so that's how we now have two versions of Ethereum. Ethereum was like, whoa, like we need to fix this. And so they hard forked the ledger. And so there's now what we call Ethereum is now a version of Ethereum where none of this happened. And then the original chain now goes by Ethereum Classic. But anyway, the point is, okay, so after a year after all that pandemonium, the SEC came out with its first report, called the DAO report. And at that time, they said the law that applies here is this so-called Howey test, which comes out of the Supreme Court case. And you're right, the original case involves orange groves of all things. And so this report this week was the first time where, what they released actually, if you read between the lines, they don't use the words like minors or anything like that. But, it very clearly kind of shows like, okay, so these are the ways that they view the Howey test. And here, when they're like describing how that would apply in this case, you can figure out, oh, they're talking about like how it would apply to minors, how it would apply to developers of these projects, things like that. And so in that regard, it was like a little bit more meat for people who want to do projects in this space where they can have more to look at, to think about when they launch something.
I do like the idea of harvesting Bitcoin instead of mining it. Just picking it up.
Yeah, well, there's another project they call theirs baking. So because one of the guys
smells good.
Yeah, one of the guys who started it is French. So he was like, you know what? If we can make up our own words, I'm going to choose baking.
As well. Yeah. Folks, if you want to get all the tech headlines each day in about 5 minutes, y'all need to subscribe to dailytechheadlines.com. It's available to keep you up to date. All right. The P2P Foundation's profile for Bitcoin creator Satoshi Nakamoto lists the date of birth as April 5th, 1975. We don't know who Satoshi Nakamoto is or if this birthday is accurate, but hey, why not? Happy birthday, Satoshi. Quickly, while we have Laura here, we do want to touch on Bitcoin. Bitcoin trading volume dropped to a 2-year low in March. However, earlier this week, the coin rebounded with a 20% rise, having its best day since 2017. Nobody seems to agree why that happened. But let's cut to the chase. Laura, is Bitcoin dead?
Oh my gosh, no, Bitcoin is definitely not dead. Will it survive a long time? Like, I don't know. Certainly I think something in the crypto space will, but just look at this. Like a few years ago, people were paying 10,000 Bitcoins to order 2 pizzas. And now a single Bitcoin is like 5,000 or whatever it is. So clearly this is not dead. And there's a significant number of people around the world who believe in it to the point where, they're putting their quote unquote savings in what they call this digital gold. And so for them, they think this is a superior form of money. Frankly, I think, well, I don't know if I would only restrict it to Bitcoin, but, crypto assets in general, I find to be a superior form of money compared to cash, seashells, credit cards, like whatever you want to call it. So in that regard, like I said, I don't know if Bitcoin will succeed long term, but is it dead? Definitely not.
All right, let's talk about DeFi, or decentralized finance, which is, as I understand it, sort of another layer being used to sort of bridge the gap, and sort of hedge yourself against some of the volatility, but take advantage of some of the independence of blockchain and cryptocurrency. Explain to us a little bit what DeFi is.
So this is a trend I've been following now for about a year in the crypto space, and it's mostly happening on Ethereum. So the examples I'll give you are from Ethereum. But essentially, if you look at our current financial system, and this goes back to the financial crisis, you know, people became disillusioned with the way our current system works because it's these, big institutions that just have all this power and take a lot of the money. And when things like Bitcoin and blockchain technologies were introduced, it introduced this idea also that now you could have these sort of like community owned networks where people own a piece of it. And rather than this central gatekeeper like a bank saying, okay, I'll take your money or I'll lend you money, or to other people, I won't do that for you. Now you could replace all that with software, right? So what a lot of these DeFi, decentralized finance projects are doing is they're essentially replicating a lot of the banking functions using smart contracts on Ethereum. So for instance, we've got decentralized lending, we've got decentralized derivatives, decentralized credit, decentralized exchange. These are all kind of different examples of some of the things that these developers are building. And I'm actually going to walk you through this one example that I just find so fascinating. And it is, I think, not only fascinating to me, but to a lot of people, because it actually makes up, I forget, it's something like maybe 75% of all DeFi at the moment. It actually accounts for 2% of all Ethereum is locked up in this system.
Interesting.
And what's fascinating about it is that it's actually kind of multiple things at once. And so the system is called MakerDAO. And originally, most people, if you just kind of ask somebody who maybe has a passing familiarity with it, they'll think, oh, MakerDAO creates the stable coin called DAI.
Mm-hmm.
And a stable coin is any kind of cryptocurrency that has a stable value similar to $1. And in this case, DAI is indeed pegged to the value of $1. But the way that they make this peg happen is different from other stable coins. You have centralized versions of stable coins where maybe they partner with a bank or multiple banks or whatever, and then there's $1 in the bank for every digital dollar that they're issuing, right? MakerDAO is a decentralized version of a stablecoin where instead of having dollars in a bank sitting anywhere where, that it poses like a certain kind of risk, right? Because then there are individual institutions that could be hacked or whatever. You can go on there with your Ether and you can create stable coins. You can create DAI for yourself. And the way that this works is you basically give yourself a loan. So let's say you have, this is the funny thing about doing these podcasts. I actually don't keep track of the prices very well because I tend to focus more on the technology. But so let's say, I'm actually not sure what the price of Ether is right now. But
we could imagine one. Yeah.
Let's say it's like $100.
Sure.
So let's say you have like 10 Ether or something, like $1,000. And you're like, okay, well, I expect the value of Ether to go up. Maybe, in a year, I think it might be at like 150 or 200. So I'd like to kind of use the money now without actually selling the Ether. So I'm going to put, and we'll just keep the numbers easy. So maybe you put like 1.5 of your Ether you put three of your Ether in the MakerDAO smart contract, and then that will enable you to take out, and actually I might be doing this wrong. Sorry. It might be, so we'll say 1.5 Ether, and then you're allowed to take out $100 worth of DAI because you have to over collateralize. It's, I think, 150%. And then you can spend that money. You can like spend those dollars and yeah, okay. Or the DAI, sorry, I shouldn't call them dollars. And okay, yeah, later you'll have to pay kind of like a quote unquote interest rate, which is actually called the DAI stability fee, which is used to make certain functions happen. So that way, indeed, the system can kind of keep going and they can pay the various people who make it happen. But that enables you to use that cash. So instead of like with a stock, you would just have to wait for it to go up to use it, right? Or to use the value in it. In this case, you can sort of have your cake and eat it too, where yes, you get to hopefully enjoy the price appreciation in the ether, but at the same time, you can sort of use the dollars for, I don't know, buying a coffee or whatever it might be.
So anyway, where are the dollars in this transaction?
So that's the DAI.
Yeah.
So that's when you take out the DAI, because the DAI is supposed to be pegged to $1. Mm-hmm. You can use the DAI to.
But how is it pegged to $1 if you're buying it with Ethereum? I think that's the part that's tripping me up.
Right. Okay. So this is where it gets tricky.
Uh-huh.
So there is actually a second token in the MakerDAO system, and that's called MKR.
Okay.
And the MKR, that the value of that goes up and down. That's not pegged to the dollar, and only special people basically are allowed. Well, not special. Sorry. That's they're essentially, that's what they call a governance token, where those people, their job is to make sure that the system does not collapse. Their job is to, if any of these, they're called collateralized debt positions when you put up your ether and then take out DAI. If any of these collateralized debt positions is getting too low, where it's falling below the 150%, then they are they need to kind of pick those off and close out those positions. And then, so like, let's say it's yours, where your CDP was falling below the threshold. So then suddenly your ether gets sold. And I actually have to, so I'm sorry that I don't remember at this point what happens to you if you just have the DAI. I think you just have the DAI, and then the system, will try to ensure that the value of the system never falls below the collateral, across the whole system.
What's their motivation to do that on the MKR side?
So for the MKR holders, if they do a good job and the peg does not fall and the system does retain its peg, then they I can't remember at what point, but at some point, some of the MKR tokens will get burnt. And so what that means is then the value should go up. However, if they don't do a good job, then more MKR tokens will be minted in order to make the system whole again.
Yeah. Okay.
So anyway, all of this is to say, this is basically like a decentralized central bank.
Right.
Right?
Yeah.
And so people are going on there, they're creating DAI for themselves, and then they're additionally using the DAI to purchase more ether. like this is where it gets, this is why I was saying there's echoes of the financial crisis.
Right.
And then on top of that, they're also doing it on other DeFi projects where you can put DAI in and then earn an interest rate on it. So like, they could have the price appreciation with the ether on the one hand, but then they get the DAI and then they can put it in it's like a decentralized money market called Compound, where I think the interest rate, at least for some period, was 6%. And then they would put the DAI into Compound and then earn the 6% additionally. So there's just all kinds of like super interesting. Yeah, I hope that wasn't too complicated for people to follow. It's
going to be real complicated for a lot of folks to follow. But I think if we can sum it up, it sounds like what's happening with DeFi and DAO, this MakerDAO being an example of that, is instead of just a currency system, a transactional currency system, you're creating a banking system. And it's more than just your local branch bank. It's like the full financial industry is what they're attempting. Does that sound about right?
Oh, exactly. Yeah, that's really it. Because like I said, I'm seeing projects in all these categories that we've got the money markets, we've got the derivatives, we've got the lenders, it's like, and yeah, it's fascinating because they're all a decentralized exchange. They're all doing things with each other. So the different DeFi projects, people are using their money in multiple ways across them.
Yeah. Well, this is fascinating, and why you folks should subscribe to Unchained and Unconfirmed to learn more about this.
We also hear a lot of these types of stories in our subreddit. You can submit stories and vote on others at dailytechnewsshow.reddit.com. Also on Facebook, facebook.com/groups/dailytechnewsshow.
Well, thank you, Laura, for joining us today and
thanks for having me.
introducing us to this topic. I know some folks out there are still going to be, their brain spinning a little, especially if they're not as familiar with the financial industry. But I saw some people in the chat room are like, okay, this sounds like options trading. This, so they're starting to catch on. But at least you now know about the term DeFi and kind of have a slot to put it in if you hear about it or talk about it. And if folks want to find out more about these sort of topics, where should they go?
You can go to unchainedpodcast.com. Both of my podcasts are there. And I also have a weekly newsletter that you can sign up for, where you will get all the podcasts plus all the links that I think are important for the week for people to stay abreast of the news in the crypto space.
Go check it out, folks. And you
Very
can follow
cool.
Laura on Twitter at Laura Shin. Also, folks, don't forget you could support this show directly through Patreon. You get all kinds of perks, including a weekly Threatwire cross post from Shannon Morse, column from Roger, an audio column from me, and more. You can find out more about that at patreon.com/DTNS.
If you've got feedback at dailytechnewsshow.com is the place to send it. We're live Monday through Friday at 4:30 p.m. Eastern, 2030 UTC. Thanks, everybody, joining us live, and find out more at dailytechnewsshow.com/live.
Back on Monday with Vlad Savov from The Verge joining us. Talk to you then.
This show is part of the Frog Pants Network. Get more at frogpants.com.
Diamond Club hopes you have enjoyed this program.
Oh, Laura, that was a
Good
Herculean
stuff.
path describing DeFi. Thank you for doing
I'm
that.
still trying to digest.
Same.
I
was
know,
like,
it's a lot
I'm
to pack in.
following most of it, but there were a couple of things where I'm like, how though?
It's a lot to
How are they
unpack.
doing
But
that?
essentially, I mean, the really short version is, like I said, instead of banks, it's being done with software. It's being done
Yeah.
with smart contracts. Like, instead of a staff of like 10,000 people spread across the world, it's like a little software program deployed on Ethereum that a few developers created. Like, that's what's going on.
I think people think, well, isn't that what Coinbase does? Isn't that what, these wallets and companies do and trading exchanges? And no, it isn't.
No.
They require people to do all of
Coinbase
that
has
side
600
of it.
people.
Yeah. And so that's the key to explaining it right there, what you said.
Yeah.
It's software doing what people do.
Yeah, it is totally crazy. But I have to admit, some of the weird, I don't know what to call it. I don't want to call them tricks, but just some of the things that people are doing or talking about.
Shenanigans.
Yeah, I'm a little bit like, oh man, like this reminds me too much of the financial crisis where everything was being leveraged in all these fancy ways. And then, it just makes you worried. Like, okay, if any piece of this doesn't work out, like the ripple effect is going to be huge. But then again, it's like, they're like, okay, no, but in our case where you can see all this stuff because it's on this ledger, we've built the software to account for these different risks. Like, it should be okay, but still, it's like, okay, in theory, I get it, but until this is really seeing a lot of money put in at this scale doing these things, I'm not comfortable saying that I am confident it won't be risky. So,
I mean, it is replicating a lot of the risks of banking institutions, right? Like you say, when it reminds you of the financial crisis, that's a financial crisis that was done by traditional banking institutions, but there aren't the safeguards on it yet. And if I'm understanding what you're saying, a lot of people are arguing like, oh, but the system will encourage the safeguards to happen. But until that actually is proven, it's
yeah, because it's
You
a
gotta take it
question
on
of,
faith.
are the smart contracts built well?
Mhm.
Are these tokenomics where, are the MKR holders, are they really being incentivized in the right way? Will the governance that's built into this model, will that work? Like, yes, so far. I mean, the one really impressive thing about Maker is that during a time when the price of Ether dropped like 90%, the maker system launched and survived, even though the collateral in the system was decreased. Like the value is literally a tenth of what it was a year ago. We haven't had a collapse of the maker DAO system. So that's kind of like, okay, that says something.
That's one test. Yeah.
Yeah. But then somebody else was saying, oh, but see, the thing is that now it's actually going to be more challenging when the price of Ether is going up, because perhaps more people will want to collateralize. So it might be harder to keep the peg. So then I was like, oh, that makes sense too, because more people are going to want to take out DAI in order to purchase Ether with that DAI. And then they have this like double exposure. And then, it's a supply and demand thing. When you have greater demand, then of course the peg is, and already it's been happening in the last few weeks, where the peg at one point dropped as low as 94 cents. Like for a while it was kind of like 97. And then anyway, it's been decreasing, and they kept bumping up the stability fee, which is the interest rate. They kept bumping that up. And finally they were like, okay, we're going to make it 7.5%. And then I think that helps, because originally it was 0.5. And then they made it like, I actually forget the interim numbers, but finally they were like, oh boy, okay, it's at 94 cents. That's kind of like far from $1. So we need to bump this fee up. So,
yeah, it's less of a peg and more something kind of stretchy.
Exactly.
It's an elastic band, not a peg.
Exactly.
Yeah. That was the part that immediately got me, is like, well, wait a minute, how is it pegged? And it's pegged by a system which theoretically could work, right, by bounding it, but it's not hard. It's not. Yeah.
Exactly. And the other thing too is that no matter what, the governance will always lag, because they're going to have to see, which way is it going? Is the peg going up or down? And so no matter what, the MKR vote, I can't remember how often they do it. I know they have a phone call every week or something like that. Yeah. But
now there needs to be another layer that can automate through software the phone call that the maker will have to do.
Right.
And that'll be DeFi.
Exactly.
Oh, man.
So, but yeah, I mean, I don't want to make it sound like MakerDAO is all DeFi. Like I said, there's the exchange, decentralized exchanges, and the money markets and all these other things. It's just that MakerDAO accounts for like 80% of all DeFi right now.
We have some suggestions for the title at showbot.chatroom.net, and the one getting the most votes right now is, I think, my favorite, the Decentralized Central Bank.
That's a good one.
Yeah, we've also got Crypto Unchained, although it's not exactly unchained, but I get where you're going after. DeFi for the tech guy. That's funny. Banking on Ether.
DTNS.
I like banking on Ether too. That's good. Wait, what was that?
DTNS with this $, maybe not for this episode, but we should remember that.
Yeah, that's a good one.
Certain financial specials.
Banking on Ether is a good one, yeah.
So, Decentralized Central Bank.
Sure.
Yeah, we can go with that.
And then Crypto Unchained I can use for GDI.
It's not Unchained.
Oh my.
Use banking on Ether for GDI if you want.
All right. Done.
Fine.
We're A/B testing different titles. One for Daily Tech News Show proper, and the other for this extended conversation.
I had all the pre and post show jibber jabber that we did.
Yeah.
Oh, okay.
Which cool. You have elevated the level of our jibber jabber today, Laura. Thank you.
Yeah, good stuff, Laura.
Sorry if I'm like too nerdy.
No, on this show, there's no such thing possible. Yeah.
Yeah.
Okay.
So, who puts up the initial amount of, when they started? Who put up the initial? Was it just those developers, or the
No,
initial?
No. It's you as an individual. You can create a loan for yourself. You create a collateralized debt position for yourself. You put up your own Ether and take out the DAI.
Got it.
It's a self loan.
Mm-hmm.
Yeah, this is why.
That's what's tripping me up. Is what?
I know, it's so complicated. It's a stable coin, a decentralized central bank, and a way to take out a loan on your own collateral. Like the whole thing. It's like just not a normal. Yeah.
It's like you're loaning to yourself in a way, kind of.
Exactly.
Yeah.
Not even.
I guess that's what's making the head scratcher for me, because it's such a 180 from when you get a mortgage. I would love to have been able to issue out my own mortgage. It would have been great.
Exactly. Yeah. Like it's like you have this asset, your house. Like, why can't you spend some of the value in it? So that's what these
Mhm.
people are
Well,
doing. Yeah.
but it's not as it's interesting. It's not as shady as like what do they call it? A reverse mortgage, right? Because
Right.
in a way, it's kind of like that, but it's not. It doesn't have the
It's
inherent like
it's like a home equity line of credit, I
Yeah.
guess.
Exactly.
Yeah.
Yeah.
HELOC.
That's exactly what it's like. One other thing, though, actually, that I forgot to mention is that speaking of the SEC, it's not totally clear yet whether like US regulation will allow
Mhm.
for this.
Mhm.
The SEC has been making some noise that the MKR tokens, I think, could be considered securities.
Uh-huh.
So we'll see. I'm a little bit obsessed with this. Like, in fact, I'm so obsessed that I did like 2 really long shows with the creator of this because the system is so complex that it literally took us that long to just kind of go
To
through
just work
everything.
through it, yeah.
But
That's why you're attempting to walk us through that in a couple of minutes earlier was pretty impressive. Thank you for that. Because yeah, I guess the MKR tokens could be an investment contract, and if
mhm.
they are, then the SEC is calling investment contracts securities under the guidelines that we were talking about. So it would
Yeah. And one other thing actually that I didn't get to explain earlier when I talked about that, I explained those 2 different types of stable coins. There's a third kind,
oh dear.
which was based on this seniorage shares model that
Uh-huh.
was even more complicated, where there's 3 tokens, 2 governance, and then the 1 stable coin. But the SEC shut that one down before it even got launched. So MakerDAO is a little bit different because since it is collateral backed, then the peg, at least there is some value in it,
Mhm,
whereas like with
mhm.
the other version that they were trying to do, it was called basis. You can look this one up. The SEC just shut that down even before it got launched and was like, no, you are not doing that. So
Too shady.
yes. Well, I didn't know about shady, but just it was
Shady's wrong.
definitely, they were like, this is definitely both 2 of the 3 tokens in the system are definitely securities.
I see.
Yeah.
Okay. So it wasn't that it was shady. It was just to come. Well, it was they were securities. Yeah.
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 So anyway.
This is. I see why you've got a lot to talk about on your shows.
Oh my God. And this is why I'm like so obsessed. And my friends in my normal life don't talk about this thing. So it's just like me like spinning up in my head all day, like all this stuff going on. And yeah, I'm
You need an
probably
outlet, and so you have a podcast.
I know. Yeah, but
Well,
I think
part of
all
it is
crypto people are like this.
part of it is just finance for a lot of people. It's just this giant opaque block. You like it. Something happens, I get my money out. Whatever happens in there, whatever. But with cryptocurrency, it's so rarefied in people's understanding of it that people just they understand maybe a portion of it, but they don't understand the whole thing, and it always comes out kind of weird.
Well, I think the challenge is that it's not only finance, but it's tech too. And both of those are things where people tend to not pay attention to the details. So I have a feeling until we have kind of the first mainstream thing that people use, crypto application or product that people use, most people really aren't going to get it. And frankly, when that product comes out, people aren't going to understand how it works. They're just going to be like, oh, I can do this thing I was never able to do before.
Yeah. And or it's so much faster. It used to be so complex. Now I understand. I just press this button.
Exactly.
I understand in quotes, meaning.
Yeah. Right.
I don't have to go talk to a broker or whatever. I mean, I've seen a lot of, and I'm sure you've talked about a lot of the possible applications of this in the home buying market to simplify all of the
like escrow,
all of that sort of thing.
Yeah. That's like a very often when I explain what a smart contract is, that's the explanation I give, actually, that you can use a program rather than a person. Yeah.
Because a lot of people have familiarity with that. Not everybody's bought a house, but more people have bought a house than have, invested in mortgage-backed securities or collateralized debt loans or.
Exactly.
Yeah.
Well,
we're going to shut the video down. No, we're going to keep the audio going. So
okay.
Video folks, thanks for watching. Audio folks, stick around. There is more to come.